following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Wednesday morning, 9:06 a.m. We got about 24 minutes to go until the start of trading. You have markets in positive territory, but we've given back some of the gains we had overnight. You talk about negative action, folks. Last Thursday, less than a week ago, you're trading at 45.09. Say goodbye to 330 S&P points. We're under 4,200. We're trading at 41.78. You made it to 41.36 last night, just after the close. We got Microsoft. We got Google. We'll go over those among some others with their numbers. Microsoft trading a little bit higher. Google trading lower on pretty decent numbers. The forecast is what is important. S&Ps right now positive by 7. Now, what happened is last night, after the close, markets continued to trade lower. You actually got on the futures a close of the 345 bar of 41.68. So you traded down 32 points following the close of the market, which is why you're well off the lows, but only positive by 7 points on the session. Now, early this morning, 4:15 a.m., you were as high as 42.17. So you're talking about 40 S&P points we've given up. You see a few of these accelerations, folks. I imagine it's going to be another wild one in the markets. You got the NASDAQ actually back in the red. Now, you make it to 12,801 last night. You're trading right now at 13,005. You get the Dow positive by 175 points this morning. Bitcoin, 38,855. I've went over it before. Bitcoin trading relatively in correlation with the NASDAQ 100. Yesterday, down dramatically. You're talking about $2,500 to the downside. The one thing I will say on Bitcoin, you take a look at a possible trend line here coming out of when it really broke out from about 22,000 back in December of 2020. You touch off that area a couple times in 2021. You touch that area earlier this year. We're right back down to that trend line right now at 38,840 on the price of Bitcoin. Back to a 15-minute chart. We got crude right at about $100, 193 pennies. We were up barely over 103 for a brief moment. Did we make it? No, 102.99. Is that the high? Thought we get over there. No, we didn't. 102.99 was the high for crude. That's from $95 to start off the week. We're trading at 101 exactly. We'll talk to our man Teddy Kegstad coming up at 40 past the hour. We talk some crude. We talk some Forex. Always a good segment. Check that out. Gold contract with volatility this morning, man. Down to 1883, up to almost 1910. We're back to 1895 for the price of gold, and we jump to the all-important notes and bonds. We are continuing a little bit higher. Yesterday, we trade higher at a lower yield. Right now, we're under 2.75%. We're sitting at about 2.74%. The yield on the 10-year, you take a little bit of a longer-term look on that 10-year, you really start to accelerate to lower prices in August. We were up as high as 135.14. You really then break with decisive action as we kick off the acceleration on March 7th. You have a 129 handle. You trade down almost 11 full points. Now, here's what I'll say here, is if you got a 382, folks, you still got over 2 full points to the upside, and that could just be a natural 382 retracement within a bear market for the price of the note and a bull market for the yield. As it is rising, we're sitting at 2.75%. You have to, again, expect you're going to get a bounce at some point, folks. We'll see where that bounce goes. All right, jumping back to the S&Ps before we get into the earnings. My dad was talking about last night on his program, making some great points, man, just about where we are in this market, how far we've gone. He's talked about potential bear markets, okay? Potential bear market, maybe you lose 50% if you're talking about a real bear market. We're only at the 236 line, folks. You make it to the 382 line, you're talking about 3,800. You're talking about 375 points below where we're at right now. Well, I just talked about that we gave up 375 points just by putting this back 5 days, folks. You basically gave up 375 points from Thursday to Tuesday. So you better believe it's possible. Again, not many people thought would be below 4150 when we were trading above 4,500 last Thursday. But it is possible. You put this back on the weekly, 50%, you're talking about 3,500, folks, all but possible. Now here, what I'll say is, you take a look at this thing long term. Excuse me. This has been a one-way trip basically from 2008, folks. Basically. Now, COVID is in there. We do have some other pullbacks. The one we're talking about, though, is just the acceleration from the COVID lows. Okay? That's not a full 50% of an entire move. I mean, you look at the real pullbacks we've had. In 2000, you had the S&Ps go from about 1,500 to, what's the low there? 771, almost cut in half, right? You did the same exact move in 2007. This is the S&P. That's not even the NASDAQ. Okay, we'll jump to the NASDAQ in a moment. I'm not sure futures go back that far in the NASDAQ. We'll find out in a second. But S&Ps do it again. In 2007, you go from 1,552 down to a low of 665, even more than cut in half, right? This is just talking about getting cut in half from the run it's had from 2167. So keep that in mind when you look at the perspective of other markets. Not saying it's going to happen, but you better get your ducks in order that it's possible, because 3,500 is completely possible in this market. That would still put us above the highs entering COVID. Remember the fear in this market that the economy was going to dry up, man? Would still be above where we came in to a pandemic that shut down business for a year. It's a one-way trip, folks. 382 very much in play of 3802 with the type of destruction we saw yesterday, man. You can't overstate that. It was almost surprising to see, and not many things are surprising right now with the volatility we have. Speaking of surprising, how about Tesla, man? From 1,000 to 861. It's like a 13.5% drop, man, in a heartbeat. $135 billion market cap loss on that stock. Just remarkable, the moves going on. All right, let's jump over to the two big dogs that had their numbers last night. Microsoft shares trade higher. They're raising the price, folks, of Outlook. First time in 10 years. Remarkable that they have not raised the price in 10 years. If you're going to do it, why not do it now when you got inflation raging and you have the cover to be raising prices without paying the price in terms of taking the guilt from your customers? Getting into the numbers of Microsoft. Earnings beat across the board, stock up on the outlook. Now, they bought Activision Blizzard. They announced the plans in the last quarter for $69 billion. They make $222 a share versus $219. Revenue, they beat by about $300 million. Revenue increased 18% year over year, ended March 31st, 20% in the prior quarter. Smallest revenue beat since 2018. Yeah, revenue guidance, this was the important part here. Revenue guidance for each of the company's three business segments surpassed the expectations they were looking for. But the middle range of the total revenue, 52.8, just below what they were looking for there in terms of the expectation. Azure, 46%. 46% in the prior quarter. The expectation was 45.3. That's the cloud. That's what you really want to be looking for. And this is where they just break down everything in terms of the company. Just remarkable cloud growth quarter over quarter. Think about this in terms of how big they are. You back it up to 20, they're growing at 60%, 47, 48. Still, they're growing 46%. Pretty consistent numbers across the board there. Now, they're also raising prices. Let's see where they get into that in this article. We'll pull it up a little bit when we get back. But they are raising prices first time in 10 years, and it makes sense. And they're raising the outlook, and they're trading higher. Google, not so much the case. We'll jump to Google as well. They miss. They're trading low. We'll be right back, folks.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&P's up just 9 points right now, trading at 41.79. As I mentioned, made it all the way up pre-market. You're talking about 42.17, the highest pre-market. Over in Europe right now, pretty calm markets. You get the FTSE basically up by 0.5%. The DAX barely in the green right now. CAC Carol barely in the green as well. Over in Asia, the Nikkei down 1.1%. Shanghai up 2.5% right now. Hang Seng is flat. All right, jumping back to Microsoft. Some big numbers across the board, as I mentioned. They beat on all segments. They're up to 280 in terms of the forecast that they're looking for. That's kind of just where you came into the action yesterday before the market sold off, though, to put things slightly in context, right? You get an absolute beat by Microsoft, and they're back to where they began the trading day yesterday. But yesterday there was a lot of destruction is another way to phrase it. Pulling back up, what we were just looking at, there was one part I just wanted to talk about here, and we're getting down below. So the number of Azure deals worth at least $100 million in the quarter more than doubled. Now that could be deceiving, as in if they only have one deal and they get a second deal up to over 100, that would be doubling it. But there is a substantial growth there, folks, in the cloud. I mean, I do have Microsoft in some retirement portfolios. They're going to be around forever, man. Microsoft said revenue from Windows license sales to PC manufacturers increased 11% in the quarter. You get down to the productivity and business process segment. That's talking about Office, LinkedIn, and Dynamics. $15.79 billion, up 17%, more than the market was looking for. 15.75. It just beats across the board. They purchased Activision Blizzard for $68.7 billion, largest transaction in their history. And the thing about that is long-term, I imagine that would be a good purchase. I don't know about $70 billion and how that can accelerate things in terms of what that cost is really worth. But if you think about the changing landscape, folks, of paying for services, recurring revenue, they're going to be creating content, okay? And is it Call of Duty, I think, is their big game? There's no way in the long run that they're not going to lock that down for themselves. If I was PlayStation, they're going to be going out buying gaming companies as well, because they're not going to allow the Xbox owner to be owning one of the biggest game franchises out there, even though Microsoft has said they plan to offer it available for the PlayStation as well. times change, folks. They're not buying a gaming company to support their competitor. So I imagine that now they're going to face some antitrust issues because of that very deal, maybe rightfully so, but I imagine they'll get through. All right, we take that and we jump to Google. Weak earnings and revenue on big YouTube miss. Top and bottom lines for the first quarter, they miss on. YouTube showed particularly weak results. That should be especially troubling, man, because YouTube is just quite an engine that Google has. Other bets, which include self-driving car unit Waymo, nearly doubled its revenue compared to the year prior. But this is where I'm talking about percentages can be a little deceiving. They doubled their revenue, but I believe that was only to like 400 million or something like that. Let's see if they get down to the numbers here. Yes. 440 million from 198. Folks, I think Google's worth like 2 trillion, 1.6 trillion. It's tough to keep track of these big companies out here. 1.5 trillion now is what Google's worth. They were worth 1.6 trillion yesterday, I believe. 400? Oh, geez, I apologize. All right, let's jump over, folks. We got our man Kevin Hincks from TD Ameritrade Fast Market. Every day, 12 noon Eastern time, folks. Kevin Hincks, Tom White, they talk about the market action. They walk you through hypothetical trades. We better get over and talk to our man Kevin Hincks with all the action going on. Kevin, good morning.
Good morning, Tommy O'Brien. Yep, big day yesterday. Starting out like it may be another big day today. Markets were up a little more than they are now. We're digesting a lot of earnings. Good news out of Microsoft. Good news out of Visa. The U.S. consumer still spending money and spending money on travel. Chipotle, people are willing, U.S. consumers still willing to spend higher prices for Chipotle products. But Boeing has got problems, right? They're not getting, even though they're up to 31 planes now in terms of production, they're just not able to turn the corner yet on profitability. So that stock, it's off its lows already. It's only down about $5.50, but that stock's going to be under pressure today as well. So really interesting day with more big names coming up today, Tommy. We bury our dead here and you move on to the next one. And so today on Fast Market, we've got PayPal, we've got Facebook, and we'll trade one of those airlines today. We'll trade Southwest today in an earnings play. So 3 good names again today. They just keep coming, Tommy.
PayPal, man, they were talking about PayPal yesterday in the Tiger's Den. You're trading right now at about 83.40. Remarkable, Kevin. The COVID lows, 82.07. Back to the entire lows for some of these companies, in particular the airlines, man. Southwest, you make it up to 64. We're back to 45. And Boeing, you are only down $6, as you said. But, boy, you came into those earnings. I think you came into them, Kevin. Yeah, basically lows you hadn't seen in over a year, right? Going back to kind of October of 2020, before we even had vaccine efficacy numbers, where airlines, quite a different story. Boeing back to 161, man. What do you think about when you talk Google? All the talk was about the YouTube slowdown, man. You're down to 22.86. I mean, these companies are just so large, Kevin. I was just talking about it before I jumped to you on the air. You're trading, though, at a $1.5 trillion valuation for Google, so you better be pushing some real numbers. But pretty interesting to see a slowdown on something like YouTube, man. We watch so much YouTube in my house, man. It never stops with the kids. What's your take on Google?
I thought that Google had a big problem because of the problems in Ukraine with YouTube. But that being said, a lot of parts of this company grew pretty well. They had 26% growth. I mean, in in a couple of their segments. I think, this company right now is a really good company with a really bad quarter out of YouTube due to, remember, the war in Ukraine is upsetting not just that area, but really all of Europe. And these are global companies, and they're not immune from that, Tommy. So, Google was certainly a miss. Certainly came in, missed the EPS, missed revenue, but it's mainly a YouTube problem that they're having.
Yeah, I know it's a tough question, man. It's like, well, what's break it all down. Still a strong company, down $100 though. Surprising to see, especially when you were sitting at $3,000 not that long ago for Google shares, trading at $22.85. And how about oil, Kevin? We're down $1.53 today. We're sitting at about $100. All the talk, of course, not all, but a lot of talk, rightfully so, about crude. I think I saw countries paying in rubles out there to make sure that it's still flowing in terms of from Russia. So many different angles involved with that. But we got crude sitting at about $100, man. We got about 30 seconds here. What's your take on this crude market?
I just don't think the crude oil story is done yet, because I don't think no fundamental change has happened to change the crude oil situation. So I just don't see any resolution yet. That doesn't mean the stock won't flip around, Tommy, but no resolution really in crude oil in my eyes.
Pretty remarkable, man. We're sitting at $100 and we've been there for like 2 months. Kevin, we appreciate the time, man. We'll be watching for the program today. 3 great stocks. We'll be watching. Have a great one, Kev.
Have a great day, Tommy.
Thanks, Kevin.
The gold market has taken off topside in a large way. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you're looking at an S&P positive by 9 points right now. NASDAQ 100 still in the red, but just by about 2 points. You got the Dow leading the way, up about 0.5%, 180 points in the green, and you got the Russell up by 2 right now. Jumping to commodities, got crude sitting right at about $100, 126 pennies. That's down from 102.50 just in the last few hours. Gold contract down as well, 18.91. You had a flash to 18.83 this morning, and we jump over to the volatility index, man. You talk about a spike. 33.81 yesterday, still sitting above 31 this morning. That's from a 19 handle just a week ago, folks. 19 handle just a week ago in the price of the VIX. We jump to the companies with earnings, see how they react on the open. Microsoft up 4.5% right now. As I mentioned, somewhat just back to where you were yesterday, which is surprising to say the least. You jump over to Google shares, different story. You're down 4.5% right now. Let's see how Tesla's trading following yesterday's action. A little bit of a pop as the markets catch a little bit of a bid on the open. You have Tesla up 2.6% right now. Kevin mentioned Visa with strong earnings last night. Look at this charge higher, up 8.7% for Visa. You put this thing on a weekly. A little bit of volatility, as high as 252 last year. This year, as high as 235. Right now, you're trading at 217.19 for the price of Visa. Chipotle Mexican Grill up 4% to $14.97. You were as high as $19.58 yesterday, but strong numbers from Chipotle as well. Yeah, $14.99. You flashed to $13.78 yesterday on their numbers initially, but we pop higher overnight. $1,500, call it, right on the dot for Chipotle Mexican Grill. All right, let's jump down to some of the stocks that are moving today. Robinhood. This is what I want to get to. I think I have this article up here. Here we go. Robinhood's in trouble, folks. Writing was on the wall when they were making all their money off of Doge trading. Cutting about 9% of full-time employees. 3,800 full-time employees as of December 31st. So you're talking about what? That'd be about 350 people that they're going to lose full-time. Declined to give more detail on the exact number of employees that they're letting go. Making these reductions to the staff is the right decision to improve efficiency, increase our velocity, ensure that we are responsive to the changing needs of our customers. While the decision to undertake this action was not easy, it is a deliberate step to ensure that we are able to continue delivering on our strategic goals and furthering our mission to democratize finance. Well, that's quite a nice press release. They released their numbers after the bell on Thursday. The blog did not mention those financial results other than saying the company has more than $6 billion in cash on its balance sheets. The only reason they're telling the market how much they have in cash is because they're losing money, hand over fist. You're down 3% today. You take a look at this thing, man. Do you see any buying in there, folks? The answer is no. Yeah, they're in trouble. They were making all their money off of Doge trading, and yes, they may be around in some capacity, folks. But that rise to meteoric levels, nothing to do with the valuation that they actually have. $38 is the IPO price, $38, and they're trading at $9.63. We'll jump to the cannabis stocks. They were talking about this in the Tiger's Den today, rightfully so, man. Talk about getting punished down to $5.28. Canopy growth. I mean, you got to go back even further, folks. You got to go back to February of 21, up to $56, now trading at $5.30. Eventually, man, there will be some value in this equity, but it is not yet remarkable how these pot stocks have gotten punished. I jump over to Constellation Brands, different story. You want a little bit of an exposure to cannabis without getting all of the exposure and volatility that comes with maybe some of those cannabis stocks. Constellation Brands, they have a huge investment in Canopy growth. They also have quite a lineup of alcoholic beverages. Corona beer, most notable, especially over the last couple of years. You have Modelo in there. They got Kim Crawford wine. Constellation flat today. But you look at where we are. This is a daily. They were just making all-time highs as recently as February 21st for Constellation Brands. Strong earnings for them recently, back to 247. Not sure I'd be loading up at these prices as you've broken out of this consolidation. Maybe you've come back and tested it. If I was going to get into that, maybe I scale in with a partial position as you were just trading 6 weeks ago at 211, and you're trading at 250 right now for Constellation Brands. Those pot stocks, watch out. All right, other stocks with action. Harley-Davidson's out with their numbers a little bit lower. We'll see how they open. In line, $1.45 a share. Revenue slightly missed estimates. HOG is their symbol. HOG. Down 2.3% on their numbers, 35.67. Been a tough go-around recently for Harley-Davidson. You're coming back to an area that you found support a couple occasions besides that acceleration lower in January for Harley-Davidson. Yeah, Capital One out with their numbers trading lower. So they beat earnings and revenue estimates for the most recent quarter. Pre-tax impact, $192 million from gains on partnership card portfolios. Lower than expected net interest margins. I imagine what was hitting that. I think it's COF, right? Capital One? Yes, it is. So you're down 6.3%. You do accelerate higher on the open. Check that out. There's a pop for you from 119 to 123.85. So the market okay, but you're still down 6%, man. You're talking about lows for the year, and you're talking about lows that go back to February of 21. Yeah, almost a full year. You came into COVID at 107. Let's jump to Visa. You came into COVID at about 210. You're sitting at 217. Different companies, but interesting to see how they're trading this morning. Visa up 8%. Strong numbers, man, for Visa. All right, let's jump around to what else I have going on. We got to talk about Mr. Bill Hwang. So, Archegos, charged with fraud after collapse of the family office. Prosecutors allege market manipulation and false statements. It'll be interesting to see the paper trail that they have here. An instrument of market manipulation and fraud, causing billions of dollars in losses for banks, investors, and its own employees. He was arrested by federal agents early today, Mr. Hwang. 11 criminal accounts with one of his associates, founder and chief financial officer, so CFO, Patrick Halligan. He is charged as well. Quite the run-up, man. $1.5 billion to $35 billion in a year. The alleged crimes artificially inflated the portfolio from $1.5 to $35 billion in a year. At one point, those positions had ballooned through $160 billion. Inflated with the use of borrowed money and derivative securities when the market turned against them. So here's the part I wanted to talk about here. What he would do is he would buy up to 5% of the company with cash, all right? Typically invested through cash equity purchases until he reached 5%. Then he would switch to a new method of trading to avoid public disclosures using a trade known as a total return swap. If one thing comes to light, folks, it's the lack of regulation actually going on, okay, in some of the finance industry, not the overburdened nature. You're not supposed to be able to amass positions without people knowing for this exact reason. Well, what do? They got total return swaps. So the same thing. He would enter into contracts with banks that would pay out if the share price increased, but cost him if the share price went down. That sounds like owning the stock. It sounds like an option. Okay, it sounds like an equity. You make money if it goes up, you lose money if it goes down. Why was that allowed to happen without him disclosing that he had massive positions in single equity portfolios that then turned against him, resulting in billions of dollars for banks, consumers, shareholders, and the likes? It is interesting how some of the banks escaped. Where you had Credit Suisse, Nomura, and Morgan Stanley taking steep losses. Goldman, Wells Fargo, and Deutsche escaped relatively unscathed. But he's going to be facing 11 accounts. He might go to jail. And yeah, fraud is a criminal crime, folks, if that's what he was committing. All right, folks, we'll be coming back. S&P's up by 18. We'll be talking a little Forex with our man Teddy Kegstat from forex-trading-unlock.com. We'll be right back, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets popping a little bit. You got the S&Ps now up 25 points right now. You jump over to the NASDAQ. You're up 1.25% right now. You got Microsoft charging higher on their earnings. You just popped about $5 from where we were on the open with Microsoft. You're now trading at 285. You jump over to Google, still in the negative, but they've got a nice pop as well. Google only down about 2.1% now for their numbers. Let's jump over to our man, Teddy Kegstead. Every Wednesday, folks, at 9:40 a.m. Eastern Time, we talk to Teddy. Put it on your calendar. You can reach Teddy every trading day at his website, forex-trading-unlock.com. We talk a little bit of Forex. We talk a little bit of crude. We got some action in that dollar index, man. Teddy Kegstead, good morning.
Good morning, Tommy. Yeah, what a really weird week this is, I'll tell you what.
Well, you know, it's you're the Forex king, Teddy, and I'm jumping around. I always keep him on my radar, especially now, man, with where yields are going, right, where the dollar is going, some of the moves in these Forex markets. But it's always interesting when I'm getting ready to talk to you on Wednesdays at 9:40, and I'm looking at the markets especially, and I'm saying, man, there's some real moves going on in this market. Where do you want to kick things off?
I think we should just kick things off by kind of walking through what's happened over the past couple days.
Let's do it.
We had a nice little buy signal in the 30-year bond about a week ago. They've been trending higher for the past 5 sessions, and what's weird with the Forex markets is, you know, interest rates are a function of currency pricing. So with interest rates going down right now, as far as the market rate is concerned with the rally, you would think that you would have dollar weakness. Okay, you should have at least a dollar correction right now. Sure. We would have been ripe to have a dollar sell-off, meaning the dollar index most likely would have pulled back over the past few sessions. Instead, you have the euro hammering new lows. You have the pound that fell out of bed over the past few sessions, you know, and even the Swiss. The Swiss is the one that surprised me the most, is how much that one has rallied over the past couple of sessions, you know. So the fact that we have these markets going, it's not that they trade in tandem and always go in a certain fashion. However, they do support the trend. And right now, being in these toppy areas, if you will, or bottomy-ish areas, for them to diverge like that is a very, very, very weird and odd circumstance right now. It's hard to get a beat on it, you know. I mean, obviously, I think one of the biggest things you're seeing with the European currencies as far as the Forex market is concerned is that, you know, sanctions on Russia are also sanctions on the EU. And also on UK, you know. So the reality is that, you know, they're exporting countries, and one of their biggest exports is to Russia. So now you have the UK and all of the EU that has cut themselves off from, you know, one of their biggest buyers, you know. So, and I think you're starting to really see that as far as what currency traders are looking to as far as value. I mean, we were talking about that the euro has a potential to get down to parity sometime in the next, you know, I think it was 2 weeks ago we were talking about that it would take probably until the end of the summer, because we're looking at a conflict, that's not going to end anytime soon. It's not going to happen on a dime, that's for sure. And right now, when you have between the COVID shutdowns that were first, then you open up, and then all of a sudden you shut. I mean, there's factories that are shutting down all across Europe right now.
Sure.
You know, because who are they going to send product to? You know,
Yeah.
so and that starts to implicate other supply chain issues and demand issues. You know, so we're coming into a world right now where, you know, we've never gone through this kind of thing, not in our lifetimes, that's for sure. You know, and I think that these dynamics are starting to really show, you know, as far as the big economic numbers, you really have to watch those, because the dollar shouldn't be as strong as it is right now. There's no reason for it. You know, I mean, strong, yes, but not like it is right now. I mean, if you look at the dollar index, that's because the euro, the pound, now the yen, this is the interesting one. We've been talking about the yen a lot, right? So the yen had a little pullback over the past 2 sessions, and now it's bounced back today. That was a very weird sell-off, the way it was pounding on support, really, you know, while the other ones were falling out of bed. Because usually you have a divergence between which way the yen goes and the other ones are going. You don't typically see them going the way they were working over the past 2 sessions. So the volatility is, I mean, we know that it's not going away, and it's been here, but it's been very, very odd to get a hold of. And I think that you probably have seen, at least on the retail end, I wouldn't doubt that a lot of bears and bulls got really chewed up over the past, I would say, from Sunday night until yesterday evening. You know, now I think the trends are solid. I still think the U.S. dollar yen's going to rally. You know, I think now the euro, we were talking, I think a couple of weeks ago, I said you wouldn't see parity in the euro at least until the end of the summer, maybe the fall, because usually you find a lot of support around 107.5, 107 even, and the fact that we are just, I mean, it's like a lead weight. You know,
Yeah.
so, and I would not get in front of that momentum. I would look to sell rallies, you know, as far as that's concerned with the euro and the pound. You know, I would not try and be a buyer. Even if you have a really great buy signal, I would let the signal manifest itself and then look for weakness to come back in, you know, as long as the geopolitical, you know, stage remains the same.
Just amazing moves, man, that you're, you know, a year ago back, you're sitting at 122 in the euro basically in May, and it's going to be May in, less than a week, and we're sitting at 105, man. Just remarkable. I was reading an article today over at Bloomberg, Teddy, and it was an opinion article, but it was talking about rates, and it was talking about FANG stocks and the euro, and one thing that caught my eye, thinking about talking to you, man, talking about rates, talking about the dollar, is the widening gap with the rate expectations are rising in the EU, but dwarfed by the U.S. change. And basically the chart here, I'm not sure if you can see it, but we got basically the expectation when you're talking about where we are just massively in terms of the U.S. versus the EU, the rate hikes. Do you see that being a continual factor in this dollar index? And I totally agree with what you're saying. There should have been a reprieve no matter what, right? I mean, if we get kind of that pullback in yields, that should matter, and it's kind of been a little bit weird of how the dollar indexes keep charging higher. But are you looking at, obviously, and you've taught me this somewhat over like the last 5, I mean, we've been talking so many years, man. I was just thinking that and we'll jump to it, that the Swiss parity is almost back, and that's what we were talking about when we first started chatting with you. Right. But do you look for where Europe goes versus where the U.S. goes, where the rate hikes are, in terms of at least for those two currencies, the euro, U.S. dollar? How do you look at that? Yeah, okay.
Absolutely, Tommy, I do, for sure. And that's a gap that is widening. You very good observation that I don't see that trend stopping. I think that no matter what, the Fed was in a lag to begin with. We should have been raising rates already a few years ago, you know, so that we could cut rates right now and help to.
Got to raise in good times, man. Right, totally.
Correct. And when it comes to the EU, you got to remember that they were on quantitative easing 20 or something like that. I mean, it's just their packages are, you know, it's kind of like what we talked about with the Japanese, how they reverse course with the Bank of Japan. You can't be buying up your debt market and then say you're going to raise rates. You know, those yields are going to be in a tug of war. And at least we know that we're cutting our purchasing on bonds and notes. We know that as far as where are we going to be a year from now, we know we're going to be at least 2+% on the discount rate. You know, I mean, it would be shocking if we weren't, you know. But
hopefully we are, right? Because that means bad things happen in them, at least the market, if we're not. Right, I agree, sure.
Right. But with the ECB, you know, it doesn't make any sense that they're staying so held fast on this. I don't understand, especially with them putting the sanctions on Russia. they're burying their own currency. They're doing everything to trash their own value, which in the short run helps with exports, but it's going to hurt them in the long run.
It's a tough deal, man, right? Inflation raging. They got a war going on. They got commodity prices high.
Right.
Teddy, can you stay with us to chat a little bit of crude for a second? You got a few minutes? Okay,
sure,
perfect. We'll come back. I know we got listeners. They want to hear some crude conversation, man. We'll be right back. We'll be talking some crude, folks. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The gold market has taken off topside in a large way. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets higher. You get the NASDAQ 100 right now up 1.3%. S&P's just coming above 1% at 42.15. Dow right now up 0.8%. We're on the phone. We're on the video with our man Teddy Kegstad. We're going to talk a little Forex. So, Teddy, we got crude at 100. If the listeners been watching, viewers watching for a while, they know you're a bull. I'm pretty sure you're probably going to be a bull longer term. But we got about 2 minutes right now. If you could walk the viewers through what you're looking for in terms of what shapes this market in the near term versus the long term if you are trying to trade this market. God bless you, man. But talk to us about crude, Teddy.
Well, I would expect you see a rally coming up again over the next week or so. I think that the coil has been winding, if you will. We hit some nice resistance, and it definitely, remember we've been talking about once you get crude oil up around $100 to $110, consumers are making choices. We already know that that's definitely coming into play right now. Yes. And I think that trend is going to continue. You know, it's kind of funny how if you listen to the news, you know, we know that the airlines are booking up all kinds of flights for the summer. Travel is definitely going to be increasing, okay? Well, that's great for transportation stocks, but it doesn't mean that when people are traveling that they're going to be spending a lot of money because it's going to cost them a lot to travel, and since people were contained for over, 2 years in some cases, so people want to see their relatives. So they're making those choices for sure that they want to see people. So they're willing to travel, you know what I mean? But I don't think that means it's going to be a boom to the economy because of that, and I think that that's also going to wane, and in the short run, it's going to drive up demand for sure, and I think you have to look at what's going on in Shanghai too. This bottleneck, what's going on with them.
Yeah.
What happens when Shanghai opens its doors? What happens when the factories go back on? You have all these ships, that have built up around. I mean, I looked at a map and I was of a picture.
I think I saw that same picture. I saw something like it. I know what you mean. All those ships out there, just like little ant dots, right, sitting in the water.
Right.
Yeah.
It's almost like the country's expanding. I mean, like if you look at it from an aerial view.
Sure.
And I think that when that actually starts to that's going to be a big deal when they come back online. Because what's going to be the demand for crude oil then? For the ships and stuff like that.
So
Not
many
to mention
variables,
what's it going to right. So I think that we're going to see in a month or so, 2 weeks, a big rally again.
Teddy, man, we appreciate the time so much, man. You have a great week. We'll talk to you next Wednesday,
too.
brother. Okay,
Take care.
Thanks. Stay tuned, folks. We appreciate you joining in. We got live programming all day. Our man Basil Chapman's coming up next. We got markets positive today. The day is young, as Basil says. Stay tuned, folks. We'll be right back.